What is up, YouTube? This is Raj with Minor Wealth. Today, I want to show an example of a fair value gap. It is one of these tools I use to trade intraday to make some money. If you don't know me, I'm trading on Webull every day trading to try to make some extra money. I've been successful so far. I've been doing this for over 8 years now. So this is something on and off. So this is something that you don't just get into and expect you're going to be making a whole bunch of money. Matter of fact, most people lose money doing this. So you have to have experience. You don't just go on a basketball court thinking you're just going to start jacking up threes and win games. No, you need to learn a lot of things. And this is one of the tools or the skills to use. I'm going to show you some real life examples too, the past 2 days, how it made me money. So this is it. This is a fair value gap. When you're day trading or when you're trading, these are candles. Green ones mean there are buyers buying up stock. Red ones mean there are sellers. That's what the stock market is, buyers and sellers, right? So this is going up here, buyers, buyers, buyers. And this gap right here, see this wick on the left side and this wick on the right side? This body candle has no wicks to the left or to the right. That is a fair value gap. That means there are more buyers and sellers here, and it went up so fast that the sellers weren't able to compete. So it leaves a void. It leaves an imbalance, which price likes to magnetize back to it in order to fill the balance. So this is what I do whenever I see a fair value gap. When something goes up really fast or down really fast, I do a rectangle and I draw something like this so it can indicate the fair value gap void. This is the void. See, the wick stops here and the wick stops here to the left and to the right. So this is the void. And I'm going to make the color of the void green, meaning there are more buyers there than sellers because it's a green fair value gap. And this is just an example, but as you can see, it goes up and goes up. Most of the time, the price wants to retrace into that fair value gap. And that's a great opportunity to buy some options or buy some of that stock, betting that it's going to go up. So here it goes down into the fair value gap right here. And this wick goes below the fair value gap. That's okay as long as it's a wick. But if the body closes below, then that is a inverse fair value gap, meaning that it is reversing. If the body went like this and closed below this gap right here, then that means it's bearish. It might start going down. Does that make sense? But because this wick is only touching the bottom, that is a great time to see if there's confirmation to the upside and buy some options, buy some stock here to bet that it goes up. Does that make sense? Let me show you a real life example. Okay, this is NVIDIA yesterday on the 28th, as you can see, 7/28. I made some $300 doing this one. So day at market open 9:30, the stock went up. You see this green candle? Stock went up so fast. There's no wicks to the left or to the right of it. So this is a fair value gap. I'm going to get the rectangle drawing here, and I'm going to start at this wick to the right and go down and meet this wick to the left. So that is the fair value gap right there. And I'm going to draw it green just to remind myself that it is a buyer's fair value gap. So this is what happened. It went up. I didn't do anything. I'm just watching the market, and I see it go down and it goes back up. So now I'm watching for a retracement because I know yesterday was a bullish day. Trump just made a deal with Europe, so everyone's excited, everyone's bullish. So I'm betting for a retracement to happen, and look what happened. It goes right back down into this fair value gap right here, as you can see. And this is a good time to start looking. Hey, it may start going up. Let me start looking for call options or to buy the stock. So this is where I bought some options right here, and I rode it all the way up to here, and it made me around $400 in less than 10 minutes. See, as you can see, it retraces into the fair value gap to balance the price, and it goes right back up. Before it makes another move to the upside, it wants to go back down here and kind of balance this price out. That's what fair value gaps do. They're magnets for price, and this is what happened. And I'll show you another example today, another real world example today, the 30th, no, the 29th, Tuesday to 29th. Market open 9:30. Things go down and then things go up. Look at this big candle right here. This is a fair value gap. So we're going to draw a rectangle starting at this to the left, this wick, and then ending to the right, which is probably around all the way up here. So we're going to drag that out, and look what happened. I made around $200 today. I was very low risk today because yesterday was bullish. So today there's a lot of profit taking. As you can see, it went down, but I made some money here. I like to remind myself, make it green, just to remind myself that it's a bullish fair value gap. So this is, it goes up and I'm waiting for a retracement. It goes down. That's a good retracement, but not good enough for me. It's like halfway, and look what happens. It goes right back up. And then it goes right back down into the bottom of this fair value gap right here. Almost the bottom, just like the last one. Almost the bottom, just touching the bottom. And it goes straight up. So I caught this move right here. I bought around right here, and I sold around right here just to keep it safe today. But this is just an example of how it works. That's 2 days in a row it happened. It's been happening all month, and it's just a great way to make some money. It pulls up, fair value gap, retraces into the fair value gap to balance the price out. It's a magnet for price action, and then it goes right back up. Be careful because this was close. If it goes down here and the body, a red candle body, closes below the fair value gap, it may start going down, like this one right here. It closed below the fair value gap. It goes up, touches it again, and now it's going right back down. That is the sign of a reversal. The candle closing below the fair value gap. As you can see, this stuff works. You just have to know it, and with experience, you'll kind of see, all right, the price is hanging at the bottom of this fair value gap. It's going to reverse soon. You see things like that, and it's easy money. There are a lot of different tools like this, order blocks, inverse fair value gaps that I'm going to start making videos on when I see examples of. So subscribe, like the channel. If you want to make extra money on the side doing this, it can be done, guys. Good luck. Take it easy. Peace.